Hi, it's Dre Griggs with Obsidian Wisdom. Today we'll be answering the question, are we in a recession? If you looked at the numbers, by the definition of a recession, many people would say yes. To be in a recession, you need 2 quarters of negative economic growth, and we're talking about the GDP. When you look at the economic growth from the first quarter, it was negative, and the second quarter we just got, that was negative as well. It was about negative 0.9%. Now, some will tell you, hey, you want to be cautious whenever they first give the numbers because they often revise them. The economy is very complex and it takes a lot of calculations, and they end up making some changes to it as time goes on. You'll see that they'll make revisions to everything from the GDP to the unemployment and the cost of living. They make adjustments on a regular basis just because they get better data and they're able to kind of look back at it. When you ask the question, are we in a recession? You'll see it depends on a few things. If you are trying to get a house and you can't get a house, you may feel that we're in a recession. And that would be based on the increased interest rates that the Fed has done. You'll see just this past Thursday, the Fed increased the interest rates by another 0.75%. They did that last month as well. And as you make things more expensive, certain things tied to the interest rates, such as your housing interest rates, that is going to be much more expensive. Also, if you're a business who is trying to get funding, then you will say, you know what, I think we're in a recession too. This money is very hard for me to get. These loans, these rates are so much higher, and it's starting to make things very difficult for me. But at the same time, you could say, well, I don't feel we're in a recession because the credit worthiness is still pretty high among Americans. Also, if you're looking at the stock market, you will notice that it just grew by 9% in the month of July. That is its best month since November of 2020. That was before we just went through all this COVID stuff. So that's a very strong performance as well. Also, when you look at our unemployment rate, that's around 3.6%, and people's rates are growing significantly. So you would look at the unemployment rate, you would look at the stock market, and you would look at the wages of the employees, and you would say, I think we're not in a recession. I feel like we're doing really good. But no one would argue that our GDP is not slowing down. When you look at the growth in our economy, it is slowing. And that is also one of the indicators of whether we're doing good or not. Now, that is a technical definition where if you have 2 consecutive quarters of economic decline, then that means that we're in a recession. Now, some people are going to say, well, Dre, when you look at everything else going on, I feel like we're not really in a recession. But at the same time, there are so many indicators that would lead you to believe that the economy is doing very well. And for that, you will look at the unemployment rate, the rising wages, and the growth of our overall stock market. On the other end, you could say, well, I'm looking at these numbers and it's becoming more expensive to buy a house, which is cooling off our housing market. You could also say it's very difficult for businesses to get funding. And if the credit worthiness does become an issue, then we will be seeing a lot more contractions where people aren't able to access the money like they once were able to. Also, when you look at inflation, people are starting to make really hard decisions on whether they can afford the same food that they used to get. Now, people are making small changes where they're not maybe getting organic and they're just getting regular chicken, or maybe they're getting the off brand of certain foods. Also, keep in mind that people are very concerned about the price of gas. Now, at the same time, the price of gas has been going down for about the past month. People are still worried because they feel like it's still pretty high. So when you're answering the question of whether we are in a recession, it ultimately comes down to, do you have a job? Do you have a house that you want? And are you able to afford the food that you're eating? If the answer is no to any of those, then you may feel that we are in a recession. If you're able to answer yes to those 3 questions, then you probably don't feel we're in a recession. There's enough data that can let you know that without a doubt, our economy is slowing and shrinking. Now, there are some signs that show this may be impacting the job market. There are dozens of companies that have been laying people off, having hiring freezes, rescinding job offers, to the point that you can see that this is starting to creep into our overall unemployment rate. If you take the Fed at their word, and their goal is to get inflation back to normal inflationary, where it's about 2 to 3%, most economists will say that means we have to increase the unemployment rate somewhere around 2 to 3%. That you cannot continue to have an unemployment rate at 3.6% and be able to lower inflation. I believe that information lets us know that whether you think we're just starting a recession or whether you don't think we're in a recession, that it's fair to say that things are going to progressively get a little bit worse, because the goal is to increase unemployment by 2 to 3%. That will decrease the competitiveness in the market where people are starting to increase wages by so much because everybody's losing their talent because there's so many jobs out there. But if you're able to start shrinking the job opportunities and increase the number of people looking for jobs, that is going to cause a shift in our economy that will then be able to give the employers the option to start lowering some of the wages. And as employees start making less again, that is going to lower the demand in the market. And once you lower the demand in the market, that is going to start lowering the prices. So that is the goal that the Fed has set out. They are focused on inflation. They're not focused as much about the unemployment rate and whether we continue to grow jobs at 400,000 a month. In their mind, they know the trade-off between a red hot economy where everybody has a job and everybody is getting 10, 15% raises every single month because everybody has so many options, that they are willing to trade that for some unemployment so they can lower the inflation rate. Because if things do just keep going up, we all understand at some point the bubble's got to pop. From the Fed's perspective, they want to let the air out of the balloon a little bit easily. They don't want it to be a big balloon that just pops. But in their mind, as they increase interest rates, they lower demand, increase unemployment a little bit, inflation goes down, everything kind of gets back to normal, but they rescind some of the gains. Maybe they get us back to 2019, 2020 economic numbers. They are trying to find that magic spot. The concern is that the Fed increasing rates brings the unemployment rate up not 2%, but 5 to 8%, which would lead us into a much deeper recession. The Fed would still lower inflation to their 2 to 3% mark, but they would have missed the unemployment rate in the process. And they still would have lowered demand, but again, we would be in a much deeper recession that would take much more time for us to climb out of. So if you were to ask me, Dre, are we in a recession? I would say technically yes, but I lean no. We still have so many people with jobs. The stock market is still going up. But I will say things will get worse before they get better. And I do believe that we will be in a recession by the end of this year. Go ahead and share your thoughts in the comments. Do you believe that we're in a recession? Why or why not? If you liked the video, I ask you to like and subscribe, and feel free to check out other Wisdometric videos if you're looking for ways to eradicate financial stress, generate passive income, and build a prosperous retirement strategy.